Johnson Johnson out just minutes ago with its third quarter results, and joining us right now to break down the numbers is Joe Wolk. He is J&J's CFO. He's also a member of the CNBC CFO Council. And Joe, first of all, this is the first breakout of earnings since the Kenvue spinoff, so obviously people are very eager to hear about how the company's doing. You can see the stock right now, it's up by about 0.75 of a percentage point. Thank you for being with us. Hoping you can break down some of these numbers.
Absolutely. Good morning, Becky. It's a pleasure to be with you this morning. We had another strong quarter in 2023. It's really dovetails into what's shaping up to be a very strong full-year projection. As you saw, our sales were up about 7%. Earnings were up about 14%. And the way we executed the Kenvue transaction, where we were able to retire a number of shares, EPS is up 19%. We're seeing strength in our pharmaceutical, or what we're calling our innovative medicine group now, in oncology, specifically multiple myeloma, Carvykti, Tecvayli. We introduced a new product, Talvey, is complementing the success that we've had for years with Darzalex. In immunology, Tremfya for psoriasis, as well as Stelara, performed extremely well. And then in treatment-resistant depression in our neuroscience franchise, we had great performance out of Spravato. It continues to do extremely well and provides great value for patients. On the medtech side, electrophysiology, which continually grows 20% a quarter, did the same in the third quarter. We have new products coming out next year with some data readouts. Abiomed, the acquisition we made at the end of 2022, continues to perform extremely well. We're enrolling clinical trials. That was a big part
of the medtech growth, too. I think that was 4.7% added to.
Yeah, it was. And while the quarter was strong, Becky, we're even more encouraged about the future. We've got some great data readouts happening as early as this week at the European Society of Medical Oncology for bladder cancer, for small cell lung cancer. Later on in the coming weeks, we'll have readouts on RA, rheumatoid arthritis. So we're very well positioned, not just for the balance of this year, but into 2024 and beyond.
Well, let me ask you about that, Joe, because if you are so confident about the future, why not raise the guidance even more? You are now talking, I realize you raised guidance. You're now talking about, I think, $10.07 to $10.13 a share for the full year. Yep. Before that, the guidance had been $10 to $10.10. So you raised the guidance by at least 7 cents to bring that up onto the higher end, but you beat by 14 cents just for this quarter alone. So You're not even raising it as much to reflect the beat for this year. Do you think you're going to continue to beat in the quarter to come?
Yeah, no, that's a good question, Becky. Some of the headwind that you're seeing is just a difference in currency rates. So the euro to the U.S. dollar was 1.10 back in the second quarter. Now it's at 1.05. That provides a little bit of a headwind for us. But quite frankly, so it's really a 10-cent raise on a 14-cent beat. Still a little bit of a gap, understandably. But what we've challenged the teams with is finding ways to accelerate clinical trials, to find ways to invest in commercial capability so that we can bring these great products to the market even quicker.
Let me also ask you just about international versus U.S. Maybe this is a reflection of the strong dollar, but you really had strong growth in the United States. I think it was something like 11% versus up, was it 1% internationally? Just going back to look at some of these numbers. I mean, is that the strong dollar, or is there something else that's happening there, too?
There's a piece of the strong dollar. Actually, a bigger component of that is, quite frankly, some of the vaccine revenue. You may recall that for COVID vaccine, we had a product on the market a year ago that was pretty substantial. Those sales have been minimal at this point. It was a not-for-profit business for us, so it was never material to our financial performance. But when you see the reported results, that really is the big change in terms of OUS performance in the quarter.
So we heard from Pfizer that it was a big deal for them that the COVID vaccines are not getting nearly as much demand as they had anticipated and as we've seen in the past. But for you, it doesn't matter as much because it wasn't a big item for your profit line?
Our financial performance and success was never dependent on the COVID-19 vaccine.
Okay, Joe, let's talk a little bit more about what you're seeing. You mentioned multiple myeloma, and that's Tecvayli, correct? Is Carvykti also part of that, or what's the Carvykti drug? Because I saw that was part of the big strength.
Yeah, Carvykti is a CAR T therapy, which uses the patient's own cells. They're reprocessed and then put back into the patient. Very intensive. But we have two new bispecifics, which are easier for some patients, known as Tecvayli and Talvey, which is recently launched. That complements Darzalex, which has been on the market with a CD38 for a number of years. So we've got the complete regimen. We found out from multiple myeloma is a very, I'll say, specific disease to the individual, and we've got a number of options. We're hopeful when we talk to our scientists that some of these combinations could even potentially lead to cures someday.
Let me talk to you very quickly before we run out of time about the spinoff of Kenvue. Again, this first quarter, you're breaking all of this out. You say that raised $13.2 billion in cash proceeds. It reduced your outstanding share count by 191 million shares. That's about 7% without use of cash and tax-free. 180 million shares of Kenvue stock that you kept. That gives you flexibility to do what? Could sell it if you need to raise funds, or what do you do with it?
Yeah, well, at the time of the tender offer, we felt very good about the prospects, and still do, about the prospects of Kenvue and the success that they're going to enjoy. So we just thought it was a good investment. It does provide us flexibility down the road to raise some cash, to lean into our capital allocation priorities of investing in our own pipeline, maybe doing a deal or two, or simply raising the dividend as we have for 61 consecutive years.